I say the words month-end close, you think to yourself things like trying to get your journal entries booked on time, trying to reconcile bank accounts, balance sheet accounts, inventory, and trying to catch any errors that have occurred throughout the month before you close the books. On top of that, you have to do all of this quickly and accurately before a certain deadline. You probably even know that when month-end close time rolls around, you're going to be putting in some long hours. But guess what? What if I told you that it doesn't have to be like this? What if I told you that in the next hour, you can learn what mistakes to avoid at month end so that you can have a quicker, more efficient, and accurate month-end close? In the next hour, myself and some other experts from the New View Strategies team will share with you our very many lessons learned throughout our many accumulated years of month-end close with NAV and Business Central. Before we jump into the content, I'd like to just do a quick introduction of myself and 5 of the New View Strategies team members. My name is Cari Corozza, and the 2 things to know about me are that I love anything around month end, and I also love traveling the world, seeing the different cultures, seeing different groups of people, and how everyone else is living their lives. These are 5 of the lovely faces of the New View Strategies team members that will be joining us in the next hour. These 5 members have graciously volunteered to talk through their experiences that they've seen at month end, the mistakes that you can avoid, and how you can have a better and faster month end close. So let's get started right away with our first guest, Mark Rhodes. Our first guest speaker we have today is Mark Rhodes, and Mark's costly mistake to avoid is don't wait until the end of the month to start month-end close. Mark, do you want to expand a little bit on that and tell us what you've kind of seen in the past with users?
I would love to, Cari. Thank you very much for asking me to share my thoughts on this. And hey, we've got matching shirts on today.
Look
Pretty
at that.
Cool. Nice coordination there.
Yeah.
Hey, in all of the years of working with accounting teams that I've experienced, month-end close is a 3-letter word. Sort of, you know what I'm talking about.
Absolutely.
It just immediately brings up stress and consternation, and it's always been interesting to me why it's that way. And I think it's just, well, really just built on foundation. There's a certain process you have to go through. There's checklists, there's order to it. You want to make sure not to miss anything. And I think that structure just kind of embeds itself to where that's the way you do closes and that's the way you have to do them. And you kind of get locked into that. And like I said, I've always wondered what can we do to alleviate that stress, make the accounting team a little bit happier during that period and not cause all that stress to well up and have to worry about scheduling everything around that. And you guys all know what I'm talking about. So yes, I firmly believe that you can move up some of your closing processes and transactions further throughout the month. And I know that's a radical concept because guess what? We call it month-end close, and shouldn't we be doing it at month end? But boy, I've got a list of great reasons why you should do that. And so let's talk about that a little bit first. And then Cari's going to show you a couple great ideas about what you can do to move it up through the month. So if you think about it, there's a certain amount of work that happens during month-end close. And whether you do it in 3 days or 10 days or 31 days, right, it's roughly the same amount of work. So I'm a big believer in time shifting if you can, right? If you can move that work up through the month and not have to compress it so much at the end, you're still going through the paces. You're still having to do roughly the same amount. And I'll put an asterisk on that, come back to that. But it's just in terms of how you approach it and when you think about it. Now, there's a lot of benefits in terms of shifting some of your processes and entries up during the month, right? If you can think, I'm sure one comes to mind immediately is less stress, right? End of the month that we're trying to meet a schedule. We promised reports to management by 3 days from now, whatever the case may be. And if you're able to move it up through the month, boy, doesn't that relieve the stress on the team. And that's got a lot of side benefits along with that, other than the obvious. You move it up through the month, they're less likely to miss things, right? Overlook issues, overlook errors. certainly they're going to remember more clearly what transactions, what happened, right, in terms of what they need to book and the entries that they need to book related to those transactions, rather than wait until the end of the month and then having to either rely on memory, which is not 100%, or spend all this time researching and having to come back to it. So if you book entries and make the adjustments when you need to, or right when it happens, right, you're going to get a lot less errors. You're going to get a lot more detail. You're going to get a lot more clarity, right? And then also think about just how the human mind works. If you're under stress, it's harder to recall things. It's harder to do activities with accuracy. So again, you move those transactions and those processes up during the month, everybody's going to benefit from increased accuracy, less errors, and really being able to remember what's happening and document it far better. So that's the pitch for doing that. Now, I'll give you even a couple more benefits, and I'm sure you got into a couple of these already. You get your team together and talk about, okay, what do we do during month end? When's the last time you did that with your team? You're kind of following the checklist and going through the processes, but when's the last time you really got together and examined what do you do during month end, and is it all necessary even? And I bet you'll even find some things that probably either aren't necessary or there's probably a better way to do it at this point, just simply because technology's improved. Folks have gotten smarter, hopefully, on your team, and there's a better way to do things. So get the team together, walk through that, say, okay, what is our month-end process? What can we eliminate or reduce? And then how can we shift that up? They're going to love being included in that conversation, let me tell you. And so, of course, then, boy, if you're having a tough time meeting management expectations in terms of getting the books closed quickly enough, you're going to be able to shorten up that process. You're going to be able to report sooner, less stress, everybody's hunky-dory. And in fact, you're going to have the side benefit of now moving from transaction processing at month end to really looking at the results, being able to interpret them, put some perspective around that, and do some analysis and provide insight to your management team. They're really going to be happy with that.
Yeah, amazing viewpoints, Mark, that you pointed out. And I'll say too, you mentioned that we're stressed at month end trying to get things done. I have been in that situation many times before where you're just trying to get everything in because you have deadlines to meet, maybe that management have given you or your bank has given you. So I've definitely been in those shoes. And, I've even been in the situation where I'm spending all these hours doing month end, and then the month end is closed and somebody says to me, oh, so how did we perform this month? And I kind of think to myself, I spent all this time crunching the transactions and reconciling and doing all this, but I didn't actually have the time to analyze, like you said, and look at the results and, see patterns and things like that. So by taking some of these tips, you're going to be able to free up more time to do some of that analysis that you would probably normally like to do at the end of the month, but haven't had the time to.
And you, I think, have some great examples of transactions and bookings that we can move up.
Yeah, so let's go through a few of the things that we can actually start before month end. And in my experience, these are the things that I like to get done throughout the month as I can. For some companies, you might not be able to finish all of these before month end, but like Mark said, take a minute and just review with your team things that you might be able to either eliminate or start a little bit earlier. So the first one is placing fixed assets in service. As you accumulate these charges, maybe in a fixed assets and progress account throughout the month, start to accumulate your backup data, start to accumulate the costs on those and the information. I'll show you in a screenshot where you can easily enter that in your Business Central system so that when the end of the month comes, you can just go ahead and make the entry to place that in service, or you can even be really on top of things. And if you know that an asset has been placed in service in the middle of the month, you can do that right away in Business Central as well. I'll also show you how you can defer revenue and expenses without having to manually book additional entries at the end of every month. This is one of my favorites.
Yeah.
Also, booking recurring journal entries. There is a little bit of a caveat in Business Central if you want to book recurring journal entries in the future. So we will go through how you can kind of work around this to get those booked ahead of time. And then keeping your bank account in balance. It's not fun to get to the end of the month and try to reconcile your bank account and find that you have a huge difference because you've been booking some entries during the month, but maybe not others. or somebody else hasn't been booking things. So I always recommend at least weekly, but daily if you can, make sure that your bank accounts are in balance.
Business Central, even Nav 2017, 2018 have added a lot of functionality to really make this an easy process. Great point.
Absolutely. So placing fixed assets in service. This is just an example of a fixed asset card from Business Central. And you can see here, if I know all of this information throughout the month, if I know what my item is, what the subclass and class is, I can fill all of that in. I can even fill in the responsible employee, the number of depreciation years based on, what type of asset it is. This also would help to know if you're missing anything. So maybe I actually don't know what the subclass is for something or where it's located. So this gives you the opportunity to kind of do this review ahead of time instead of waiting until the end of the month and trying to chase IT around or trying to chase somebody around and get the information you need. So as I mentioned as well, you can place this in service at any point throughout the month if you would like to, as opposed to waiting until the end.
Well, that's an easy win. Nice.
Yeah, so this is one thing I love to do, just kind of accumulate all my information. And then if I need to at the end of the month, I find out my in-service date and I just go ahead and make that entry. So one thing that I definitely recommend doing during the month instead of waiting until the end. Deferring revenue and expenses. So this is one thing that I think is pretty cool. And I know Mark mentioned, you might be doing the same amount of work, whether you do it at the end of the month or throughout the month. And he did say we'd return to that. So this is one thing that actually will completely eliminate this work for you, if you're using it as it's intended. So deferral templates. If you get you might get revenue in a month and you don't want to recognize it until a future month because the service will be provided in a future month. If that's the case, you can use what we call deferral templates within Business Central. So if you add a deferral template to your sales document, you can specify as the user when you want to actually recognize that revenue. And the same goes for expenses. If you're getting an expense for something and it's a prepaid expense, instead of moving it to a prepaid from the purchase invoice and then making a manual entry to move it out each month, especially if it's something like an annual renewal that needs to be expensed each month, you can use a deferral template to set that up for you. So this is just an overview of what that deferral template looks like. And you can specify the deferral account that you want it to sit into until it's recognized as either revenue or expense. And you can also specify the deferral schedule. So how much do you want to defer? How should it be calculated? The number of periods. And also another really cool tip to add in here is if you look under period description, we have percentage for software maintenance. And if you use this, you're going to be able to fill in the month. So this is a nice little placeholder code that we can use. So deferral templates for revenue and expenses, I know in the past for me have completely eliminated the need each month to do this giant prepaid expense entry. And same goes on the revenue side. So definitely a huge time saver.
One of the biggest time savers we see in the classes that we do, one of those biggest aha moments. It makes everybody smile, which makes us smile. Yeah.
Absolutely. I will note one little caveat with this, something that some people sometimes don't like is you are posting entries into the future. So I would always be cautious, especially if you're crossing over years with your entries. Maybe you have an annual maintenance contract that goes into next year that you're expensing. Just, be aware that you are posting into the future into your system.
Mm-hmm.
Recurring journal entries. There are a lot of instances where we have an accrual that is always the same every month. It's maybe just the amount that we anticipate for the year divided by 12, and we're booking that same amount every month. If that's the case, you can book that anytime throughout the month. You know that number isn't going to change, that accrual is not going to change. So you can book that anytime throughout the month. But one thing to note, if you have a posting date, like in my example of 3/31, which is the end of the month, but the work date in your system, normally today's date that you're actually working is before that, and you try to post that entry, you're going to get the message that there is nothing to post. Now, this isn't a very descriptive error message because we look at this entry and we say, well, there is something there to post. So I don't know what the system is trying to tell me. What the system actually means is that you're trying to post into the future based on the work date of the system. So it's not recognizing anything to post. So the workaround for this would be going into your settings, changing the work date to, March 31st or the date that you're posting the entry for, post that entry, and then you can change your work date back if you need to. So I know a lot of people see this message and they don't exactly know what to think about it or how to get around it. And I actually didn't for a while either. I'm like, why is it telling me there's nothing to post? The entry is right there. So just be cautious if you are posting your recurring general journals into the future to, get prepared for month end, you may have to change your work date.
You find yourself talking to the system at that point. There's an entry there. What are you talking about, right?
Yeah, it's like you start to think that you're going crazy. So I know that's one that, yeah, people are always like, oh, I always wondered what that message meant. So real good one to know. The final thing when it comes to keeping bank accounts in balance, you can use something called the payment reconciliation journal. What this will do is you can set it up to import daily, weekly, however often you want, the bank statement lines from your bank account. And what this will do is it'll look at those statement lines and it'll also look at what's been posted into your bank ledger within Business Central. You can see in that left column, it has a match confidence. So if it thinks it's recognized the entry that it's matched with, it'll let you know that. If it doesn't think it's found a match, you can go ahead and you can book those entries. So you can see these are both customer and vendor payments that are being reconciled through this payment reconciliation journal. So it's a really good way to make sure that your actual bank transactions are making their way into your system. You do have the option, if you look where the little red star is, you can post the payments and you can reconcile your bank account at the same time, meaning you can clear those payments, or you can only post the payments and continue to do your bank account reconciliation as you normally would at month end. So you have both options there. So there are other things as well that you can work on throughout the month, but these are some big time savers that we recommend doing so that you don't get to the end of the month and try to chase around people to get information or try to figure out why your bank account is out of balance. If you know each week that your bank account is in balance, it's going to make your bank account reconciliation so much easier at the end of the month. It'll just be, the click of a couple buttons.
Cari, there's a real win-win here, because you think about if you're not reconciling daily, would be incredible, right? But even weekly, you get to the end of the month and you're trying to chase down one of these transactions. What else are you holding up until you get the answer to that, right? Or you're having to switch gears and go do something else, kind of having to remember where you're at and what you were trying to research on this. You get that answered much sooner in the month, and it's a much smoother process there.
Yeah, exactly. And, a lot of times we might see a transaction in our bank account, and this even happens to us. And I'm like, well, what the heck is that for? We weren't expecting this payment or this deposit or whatever it is. So it does give you that time to actually get a little bit more data on that instead of just saying, oh, well, let's book it to this account for now until we figure out what it's for. It's definitely beneficial to be doing throughout the month.
Yeah.
All right. Thank you so much, Mark, for joining us. We appreciate having you here and sharing.
Great discussion.
Experience.
Thanks, Cari.
All right, we are here with our resident inventory expert, Rob Del Prado. And the second costly mistake to avoid at month end is not properly reconciling your inventory. Rob, can you tell us a little bit about the pain points that you've seen with inventory reconciling in the past?
So there's two big ones that I've come across. The first one is that people do not understand how to control the posting cutoffs at the end of a month. And then the second one would be not understanding your inventory setups. And I've run into situations where I've come in and the person has said, hey, I'm new and this stuff isn't working. How come? So if you want to show us a picture of the posting dates, I'll talk a little bit about that. I've gone into situations where it's a new CFO and he has instructed his payables person that every invoice for the prior month has to get put in before they close the prior month. And here you see a situation where they've now moved everything ahead on the general ledger setup because they don't want anybody else posting into the new month or into the old month. And then down below, he's left his payables person allowing to post into the prior month. Well, if you're not receiving your inventory until the new month, and there's this cutoff, you're not receiving the valuation into the inventory until the new month. But if the payables person is posting his invoice or her invoice into the prior month, you now have updated the GL balance with that invoice. However, you're out of sync because inventory valuation hasn't been updated to the new month. And I've shown CFOs in the past that the inventory valuation is understated at the end of the month when you do that, because you've increased the value in the GL, but you have not increased the inventory valuations. So the real solution here is remember that you can change the invoice date. You can still post into the new month the purchase invoice to match the receipt date, but you can use the document date to post the due date, the correct due date that's out there. The other option would be to update the posting dates and allow the person to post both the receipt and the invoice. But again, now you're inflating the valuation for the previous month because you didn't really receive it until the new month. So again, posting date cutoffs are pretty critical.
Awesome. Thank you so much for sharing that piece with us. So when it comes to inventory setup, can you share a little bit about what you recommend for inventory setup and what different effects that has on your inventory entries?
So there are two key fields out here, automatic cost posting and expected cost posting. So the automatic cost posting means that when I post my purchase invoice, I'm updating the actual cost for the item. Either I'm posting a purchase invoice and is updating the true cost for the item, or I'm posting a sales invoice and it's updating the cost of sales based on the actual costs. The expected cost, and both of these are turned on right here, when you have expected cost posting turned on, you're actually posting a transaction in GL for the receipt or for the sales shipment. And I highly recommend having those turned on because then you're always updating. Now, the other thing that's out there is how often are you updating that cost? And there are several options out there. And I always like to have it on. That way it's immediate. And when I'm looking at the GL, it reflects my receipts and my shipments. Then I just have a couple other quick things out there. Obviously, it's great not to have a negative inventory because that can impact the actual cost for average costing.
Rob, have you seen any situations where users actually would have automatic cost posting turned off?
Yes, and so this becomes a point of how much volume are you pushing through and how slow is that impacting your system. So manufacturers typically have a lot more inventory transactions on a daily basis, and that may slow the processes down. However, my recommendation is always try having these things turned on. You can always turn them off at some point in time. But again, it's a matter of how much volume is going through, and you can always update your hardware to improve the performance of the postings. So again, there are situations where you might want to have it turned off.
Awesome. Let's talk a little bit around reports that you can run to make sure that your inventory is reconciled.
So here's another area where you can get into trouble if you don't understand your setups. If you have an inventory posting group that posts to a non-balance sheet item, you certainly want to exclude that. You see the little star there. So I would be excluding that inventory posting group that doesn't match my inventory GL accounts. And then I might also have like an obsolete inventory location where I'm posting or transferring inventory that's obsolete and I'm expensing it. I want to know that it's out there, but I don't want it to be on the balance sheet anymore. So depending on how my setups are configured, I need to make sure that I've got my filters right. But then when this report runs, this is really critical. This is where you would tie that to your GL.
So then can you talk us through a little bit about the output of the report and kind of what we need to pay attention to on this report?
So we have the inventory valuation report. And as I said before, that's based on what you have received as of that date, meaning what you've still got on hand that you have not received and not shipped. And then off to the right, you see a column that says inventory value to be posted. If you have automatic cost posting turned off, this is the amount that you would need to, you would see a total down there in the bottom right, and that would be the amount that would be expected to be posted to the GL. You'd have to run the adjust cost entries and then post that to the GL to get that all trued up. Now, just because you do not have a number down there in that far right column doesn't mean that you might not have to make some entries out here. If you have expected cost posting turned off, then the columns you see were received, not invoiced, the second one on the left there, and the third one on the left, shipped, not invoiced, those transactions would not be posted because you do not have expected cost posting turned on. So you'd have to make the appropriate entry to receive inventory and post the accrual out there, or to post the reduction of inventory and an expected cost of sales account. So again, knowing your setups and knowing how to review this report are critical to getting the inventory cutoff correct at month end.
Awesome. Rob, this has been some really fantastic information around inventory reconciling at month end. Hopefully our listeners can take some of this away for their next month end and have a little bit more of a pain-free process for the reconciliation. So thanks so much for joining us. We appreciate
Appreciate it, Cari. Have a good day.
Thanks, you too. For our third costly mistake to avoid at month end, we have Kim Dallefeld here with us. Hi there, Kim.
Hello, how are you, Cari?
Great. Thanks for coming to join us. So
Sure.
the third costly mistake that we have is never reviewing open orders. Can you talk a little bit more around this about what you've seen in the past and how this, could cost you time or effort at month end?
Absolutely. So we can look at this in a number of ways. To me, all the document areas should be reviewed at month end. And unfortunately, it probably should fall to some of the other departments such as procurement or sales or operations. But, kind of the buck stops in the financial area. So we ended up having to be kind of the bulldog on it, I guess. So just by looking at some of our documents, we can see quickly if there is something that we should have invoiced and we didn't, something that we, on both sides, for sales or purchases. If you want to look at that first screen that we have is a list of our open POs in this case, right? And this, we can see the old dates on there, the document date. It might be the numbering that triggers, hey, this is an older number and it's still sitting there. Why? Over time, as you monitor this month by month, you'll start seeing that and it'll really stick out at you because you're in the 106s now and we've got something out there that starts with 104. That's old, right? It needs to get handled. But what state is it in? Did we receive it? No. And we're so purchasing, hey, are we ever going to get this? Well, no. So let's get rid of it, right? Just to keep it clean. I've seen this really be a problem when in the olden days in NAB when we wanted to upgrade because we had so much data to crunch through. But plus, if it's got inventory on it, it's going to affect our replenishment. And I think that's not necessarily something that affects my month end, but does affect my operations. Additionally, we can look at on the purchasing side, we have an AP to GL reconcile report. I think we've got a screenshot. Yeah. And so this is great. I do use this for items. I know we filtered out items on this example. And this is just looking for anything else you've received. A lot of people don't have a practice of posting the fact that they, those professional fees, that work is done, that I received the fixed asset. I think it's a good practice. And a lot of companies don't use it. But by just posting the receiving through some other department, that lets accounting know this is ready to be paid. And that's going to shorten the approval process for processing the payment to the vendor. Plus, if it happens at month end and that hasn't come in, you see the second little part over on the kind of the right-hand side where it says accruals. And that's literally an accounting, an accrual reversing entry that we can make for month end. Now, the downside of this report, you got to run it right at the end of the month. Last day, first day of the month. But I'm a big proponent of closing inventory right in that time, especially if you're using expected cost. Now, I've talked about purchase orders, right? But we also have the sales side of things. What if I've shipped some things and I haven't invoiced? That's not good. We want all those sales recorded, right? The inventory to GL reconcile report could show you both of those things. But I think still looking at my documents, my list of open sales orders, open POs, is a good habit to get into. And I just talked about orders, but what about pulling up sales invoices or sales credit memos? Why is there a sales credit memo out here we haven't posted? And maybe it's valid. Maybe we're waiting on something, but maybe it's, well, yeah, we did it, but then we forgot to post it or something like that.
Yeah.
Other areas that don't really affect, I guess, financials would be transfer orders, warehouse shipments, warehouse receipts. But again, keeping those clean just keeps your data better. And then as you want to do reporting or replenishment, I think those are always just good things to do every month.
Yeah, absolutely. And I'll just say, looking at this open purchase order list, we see a couple dates on there that are from 2017, 2018. I've worked at a couple companies where we really do have purchase orders that are a couple years old. And it was always my goal to clean these up each month end, but sometimes it wasn't that easy. You know, sometimes I'm chasing purchasing around or IT around and saying, hey, I see we were supposed to order a computer. Was this order ever placed? Did we ever receive it? So it's not always as easy as it, you know, as it may seem to do every month end as well. I don't know if you've seen that.
No, you're so right. Once, and a lot of companies don't do this, that list of POs and sales orders just grows and grows. Now, once you can kind of get it whittled down and get a handle on it, you find that it's better, it's easier. It's hard to remember what happened 4 years ago for those 2017s, right? But if it was 4 months ago, my brain may work a little better for that one. So yeah, definitely it's hard when you have some of these old ones and getting everybody to agree that, yeah, that's not a valid PO anymore. Sometimes we've received it, right? And it's 4 years later and it never got invoiced, right? I get that all the time. So what do you do? Because it's actually sitting in your, if it's inventory, it's sitting in that receive not invoice column. And you really do have to invoice it through, even if you end up having to make some dollar adjustments or you do something else to balance your inventory and things like that. I'd work with, you know, accounting and your partner if you have something really old like that. I just got through working with a customer who had 5 POs from back in 2016 that had been received. And I think somewhere right in there, they turned on expected cost, and those didn't have it got reversed in expected cost, but it never really got in there, or vice versa. They were just hung, and they'd been hung for 5-6 years, and we had to clean them up. And unfortunately, we had to edit data to clean them up. And that's the best plan that Microsoft could give me for those old ones. So it's, yeah, that's why I say work with your partner, because if it's old like that, and you may have to get some help. But I think it's just a matter of having good, clean data to me. It's not so much about does this really impact my financials, unless it's something to do with, you know, posting an invoice or, on the sales or the purchase side. But and the cleaner your data is and the more you're on top of it you are, the more you can stand by those financials and know that your monthly stuff is well taken care of.
Exactly. Yeah. And as you mentioned, once you've done that initial cleanup, if you kind of make it part of your normal month-end process, it becomes a lot easier going forward. And 2 other things that I've seen with open orders, especially around purchase orders that have GL accounts, it's possible that that actually was received, but maybe when that payables person got the invoice, they manually entered it. So maybe we did receive the invoice, but it was never, you know, we didn't get the receipt lines from the purchase order. So that's one thing I've seen frequently. And another thing I've seen too is on purchase orders, a lot of times we might have a line for freight. And oftentimes that freight is estimated because we don't know, you know, what we're actually going to get charged for that from the vendor. And maybe we didn't get charged freight, or freight was consolidated on another purchase invoice. And if you're not receiving everything that's on that purchase order and invoicing it, then that's going to sit out there. So a lot of times it might even just be a matter of going out there and seeing if it's, you know, just one line that wasn't received, or was it freight or an additional cost or something like that, because that can make a difference. Even if you did receive and invoice that item, if you have any outstanding lines on there, then, you know, that's not going to clear out. So those are a couple other things that I've noticed in the past as well.
You make a good point, because it's even about quantity, right? You have 100 that you ordered and you got 98 in, that all got invoiced out, et cetera. But the system sits out there for 2. Now, in the later versions of Business Central, we have the tolerance that we can set, and that won't sit there. But for a lot of times, the reason those PO lists grow is they've got a quantity of 2 that hasn't been received, or a quantity of 3. And if we don't clear those to make sure our quantity received and our quantity invoiced are all the same, and then we can, you know, run that monthly process to delete fully invoiced purchase orders. So that's another thing. You're exactly right. It's little things that everything got done, but this one, you know, the freight didn't come in, or the quantities didn't match. Yeah, for sure.
Exactly. Awesome. Yeah, thanks so much for joining us, Kim.
Oh, I so enjoyed it.
Hope we've given our users some good information around, reviewing open orders at month end. Go ahead and just add it to your month end checklist and make it some of your normal process so that it's not a pain when you try to do it, once a year or once every 2 years. So thanks so much.
Absolutely. Thanks, Cari.
All right, so we have Cari Peters here to talk to us about dimensions today. So one costly mistake that we've seen at month end is dimensions not being assigned correctly to master data. So Cari, can you just walk us through, some issues that you've seen around dimensions being incorrect at month end time and what kinds of problems those can cause for users?
Yeah, absolutely. And this is such a big one, Cari. I get a little overly passionate about this because I see so many people get frustrated and give up on dimensions because they have these kind of problems. And really, not assigning dimensions to master data means that you're having to manually populate a lot of that stuff. So if you do not decide when you design your dimensions to make the majority of them populated by default, what's going to happen is your data entry burden is actually going to go up. And this is really going to affect people in your accounts payable area, anybody who's doing journal entries, because you can make some choices to assign dimensions to master data that help you not only with reducing the amount of data entry that anybody has to do, but really makes the computer do the work instead of your people doing the work. And what happens when that happens is that you are improving your accuracy as well as your efficiency. Because if you have that same value going in all the time repeatedly, the system is always going to put it in right, since there's no decision making. And since you don't have one of those days when you just can't remember what the right thing is, it's going to go in there accurately every time. And the other thing to think about this, Cari, is that when we assign dimensions to master data, that's giving us efficiency. But the other side of that, and I know we're going to talk about that in a little bit, is putting control on the chart of accounts so that you don't have blank dimensions, you don't have inconsistent data, so you don't have to do a whole lot of reclassification journal entries. I see people in the accounting department spend hours of time researching errors and correcting them. And that's one of those situations that also makes them very frustrated with dimensions and give up on them. And it's unfortunate because it's completely avoidable.
Yeah, and two things that you pointed out, not only do you save time not having to, look into what dimension should be used or to guess which dimension should be used, but you also have more consistent data. So yeah, two really good points that you made. So let's first look at assigning dimensions. When we talk about master data, as you heard Cari mention as well, we're really talking about things like your customer cards, your vendor cards, your item cards. Those are all the places that you'd be able to assign these dimensions. You can also assign them to your GL accounts, and we will talk about that one with the next slide. But here in this example, we have some of our customers. And let's say that we want to assign a single dimension to multiple customers at one time. What we can actually do is we can select all of those different customers. If it's in a filtered view, you can do that as well. And if you go to your dimensions multiple, that's going to bring up the box that brings up your drop-down list to allow you to select the dimension code, dimension value code, and value posting, which we'll talk a little bit more about in just a few minutes, to those multiple customers. So you can, kind of knock out a bunch of work at once. When it comes to controlling posting, we often recommend that you set a value posting on your GL account. So we get a lot of questions around what these different value posting codes mean and what they control and how they can be used. Cari, would you be able to tell us a little bit more about kind of each of these and what they mean for the user?
Yeah, absolutely. So I really believe that people should use value posting, and you've got a couple of choices from very restrictive to a little bit more open, but all of them provide some level of control. So very restrictive, if you say no code, this means that you don't ever want a code to populate to that particular GL account in this instance. So that would be complete restriction. You do not want a code posted there. Same code means that if you populate something like we have here, admin, that only the value of admin would be acceptable, but you must have the same code. And that's a pretty good option to choose for control, but it can be a little restrictive over time. If you have dimension value changes and that's restricted, you're going to have to filter through anything that's already designated and true that up. That can be a little bit painful. Or if you have processes that run in the background like adjust cost and you've had dimensions change, that can be a little bit of a showstopper. So I'm not as big of a fan of sane code. I really like code mandatory because it gives me the most control with the most flexibility. If we would fill out this screen where we would have department and then blank and then code mandatory, what we would get is complete control where the system would say, whenever you post to this GL account, I have to have a dimension value. But you've also got some flexibility in that you can pass any value you want as long as it's there before you post. So this is going to keep you from posting blanks. It's going to guide you as to which dimension set to use, but it's going to allow you to flex when things change by having that blank.
Awesome. Yeah, and I know in a lot of cases on your chart of accounts, if you have a set of, operating expense or expense accounts, a lot of times you do require a department for all of those. So I think what you just mentioned with, the dimension code of department with a blank value code and code mandatory would really help a lot of people to make sure that they are getting those dimensions entered as the transactions are being entered.
Yeah, absolutely. And if you put those two together, right, so you've got your default coming from your master data and your control on the chart of accounts, then you have set things perfectly so that you don't have blank dimensions and garbage dimensions getting into your data.
Yes, I love it. All right, so let's say that we do get to month end and we didn't have the right controls or, value code posting options set on our master data. And we noticed that there was an incorrect dimension. So we had rent expense that went to sales instead of admin. It's really kind of a pain to have to fix dimensions right now on posted transactions. We can't just go in there and select a drop-down list and change it. We actually have to make a reclassing entry, which if you look at this entry, it's using all of the same data, same GL account, same description, and it's really just moving it from one department to the other. So it really is kind of a pain to start, that we have to make these reclassing entries. And it also kind of mucks up your general ledger. So you don't want all these different entries in there saying, oh, well, I'm reclassing this from one dimension to the other, because that can start to get confusing to track. You can always look what's in your dimensions with your analysis views, but just looking at those transactions can kind of muck up your data. On the bright side of things, it appears that Microsoft is making it a lot easier for us to fix dimensions at the end of a month or whenever we notice these errors. So this is taken from the Wave 1 release of Business Central from Microsoft. And, they take advice and input from all of the users, and they take some of the top ideas and they implement those as updates, features, and corrections to the Microsoft functionality in Business Central. So based on this, it looks like we're going to be able to go to the General Ledger Entries page and select something called Correct Dimensions, meaning that on posted transactions, we can actually add a dimension, remove a dimension, or edit a dimension value, which is really, really, really exciting. I know Cari is probably really excited about this as well. I'm sure she's been waiting a long time for this. So this is something that we have never been able to do before. We have always had to make those reclassing journal entries. So Cari, I don't know if you have anything else that you want to add on this.
Yeah, I'm very excited about it. You're right that this is something that people have asked for a long time. There's a couple of add-ons and extensions now that address this kind of stuff simply because it is so frequently requested. So the fact that this is getting back into the software is really a big thing. So I'll be very curious to see if people use it responsibly. And to see if, sometimes being fast doesn't always mean accurate. So I'll be interested to see the outcome of this new tool. I'm hoping that with the way that it's being rolled out, it's really going to be the incredibly useful thing that it looks like it will be. And I'm anxious to get my hands on it.
Yeah, I'm really curious to see, once we get the release of this, how it works and if it's exactly what we think it's going to be. And I'm thinking it's going to be a huge time saver for everyone. So awesome. Thank you so much, Cari, for joining us around dimensions at month end. I hope we passed along some information that the users can start to implement right away and save themselves some hassle at month end. We are on to our fifth and final tip of the costliest mistake to avoid at month end, and we have Cynthia Preby here with us. So the last tip that we have is not using the most efficient bank reconciliation method. So Cynthia, in your experience, tell us what you've seen that have been pain points for users with bank recs.
Well, first of all, let me tell you that I want to say you saved the best for last. And it's one of those great bells and whistles, and you can tell that I kind of like bling but this isn't one of those blingy things in Business Central. It's kind of one of those necessary evils. But what I've noticed is that a lot of individuals who've come up from NAV to Business Central are still using what I call the old way, or the North American way, to do their bank rec. And there really is a newer, better, and more efficient way to do it in Business Central, and it's a shame that a lot of people aren't using it.
Awesome. So let's take a look at how we do it the new way in Business Central.
Okay. Well, first of all, how do you know whether you're doing it the new way or the old way, right?
That was going to be my question.
Yeah, so the easiest way to find out is when you open up the page to do your bank rec, if it says bank rec worksheet at the top, you're doing it the old way, or the North American way. If it says bank account reconciliation, you're already doing it the new way. So I guess you can just skip through this part of the video.
So Cynthia, you mentioned the new way. Can you explain a little bit about how we get the new way?
Sure. So in General Ledger Setup, there's actually a little setting that's the bank reconciliation with auto match. And you can see it here. And it's just a matter of switching to that. Now, caveat, if this is off, in other words, not green, you need to make sure that you have finished all of the bank reconciliations that you have in process the old way before you make a change to the new way. And you can make the change. And when you move over this slider to yes, what you're going to see is a message, and actually you're going to get two of them, alerting you that the system is going to switch to a different report to use. So that's how it's basically taking you from the old method to the new method. So you can make this change.
Awesome. And then on top of using the new method for bank account reconciliations, there's also something pretty cool that I recommend to make your bank statement imports a little bit easier. And it's an out of the box, comes with Business Central add-on on the cloud called Yodlee.
The bling. This is the bling about bank recs.
This is good bling. And just a couple screenshots around Yodlee. It's really, really simple to set up. You'll first need to just enable this extension. So you'll be able to go to the setup for Yodlee, just click enable. That's all you need to do there. And then if you go to your bank accounts, you can go under bank statement service and link to online bank account. So make sure that you're selected on the bank account that you want to list, that you want to link, and a window is going to pop up and it's just going to ask you to enter your banking credentials as you normally would log into the banking website. If you do have a fob or any sort of two-factor authentication, you might need to enter that code as well. Once you've done all of that, it should be linked and you'll be ready to use your linked bank account to import your bank statement for your bank reconciliation. So notice on this screenshot, you'll see that you have your bank account ledger entries on the right side of the screen and you have your bank statement lines on the left. So this is one way, apart from what Cynthia showed us, that you would easily know that you're using the new way with the auto match. So all you have to do at month end is go to your bank at the top, import bank statement, and a little window will pop up like the screenshot in the top right, and you just enter which dates of bank statement lines you'd like to import. So if we're reconciling for February, we enter our February dates, we click OK, and then voila, those lines automatically are going to populate into our bank statement lines box there on the left.
Now, one of the things that I want to mention is that if you don't use the Yodlee connection, you can still use the new type of bank reconciliation. It's just not quite as easy or automated, but it does work.
Absolutely, yeah. And the other little caveat just to mention, if you are using the Yodlee extension, sometimes if you have the two-factor authentication turned on for your bank account or you have a fob that you're needing to enter each time you log in, you may also get prompted when you're trying to do your bank statement import for your bank reconciliation. So just keep in mind that if you are not the one doing your bank account recs, you might want to have that person who is doing them link their account with Yodlee as opposed to you.
Yep. Or you're going to run into problems chasing down somebody to look at the code on their phone so that you can get into the system.
Yes, and I can attest that that has happened to me before.
Yes.
All right, so there are two ways that you can match your transactions, your bank statement transactions with your bank ledger entries within Business Central. The auto match bank reconciliation type, as it's called, lets you match them automatically, which is part of the great thing about it. So what's going to happen is you're going to click on match automatically, and a box will pop up and it'll let you specify a tolerance of days for the transaction date. So this is basically saying, what is the flexibility for matching transactions by date within Business Central from your bank statement to your bank ledger entries. The other things that we'll look at are the amount, the date, and the description, so that the system can identify which transactions should be matched and cleared against one another.
Yeah, so there are actually matching criteria in the system, and it can be tweaked if you need to, but to date, I really haven't had to change anything in there to make it work for any of the users that I've set up.
Awesome, and I don't think I have had to yet either. All right, so you also have the option to match manually transactions that did not automatically match in Business Central, and Cynthia will provide an example for us.
So one of the challenges with this was when we use the North American version, we have that ability to do deposits and look at them collapsed. So when the bank statement says $500, but I really have two payments that make up that $500, I could always match the deposit of $500 to the bank ledger entry of $500. Well, in this new method, we have the bank account ledger entries of 300 and 200. We don't have the concept of a collapsed deposit over here. So the way we get around this is we can actually make sure that we're using the external document number, which will show us the deposit ID or the deposit record number, and we can filter to that. So now what we can do is compare our imported bank ledger entry for the $500 deposit to the deposit entries based on the external document number. So it's really not collapsed, but it does allow us to more readily match, and we do have to do it manually, those deposits to this. Now, if you're scanning in your checks, some banks will allow you to, when you scan in the checks, each one of those checks will be recorded as a deposit. I think others you actually have to reconcile to a lump sum, but that would be depending on your bank. So some of you will have to do this and others may not.
Another really cool thing that you can do within your bank rec is that if you see a line transaction from your bank statement that has not yet been recorded into your general ledger or your bank ledger entries, you can select on that line. So in my example, a service fee that hasn't been recorded, and you can actually transfer that to a general journal. When you do that, you'll get this box that pops up on the right, and it's going to allow you to select the general journal template and the batch that you'd like to transfer that line to so that you can easily navigate to it and book it. And the great thing about this is that you don't even need to leave your bank rec to be able to, create these entries. So everything can be done within here. And I know
now,
a lot of
Cari,
times. Yep.
I'm sorry. So question, does it have to be a general journal? Can it be a payment journal or a cash receipt journal?
Yep, it can absolutely. So you'd see a little drop down in your general journal template, allowing you to select from, like you said, payment journal, cash receipts, deposit journal. So based on what type of transaction it is, you can transfer it to that journal.
Excellent. This is really cool.
Yeah, so these have been a few, ways to better do your bank reconciliations at month end. And one thing that I've seen a lot with users, and that actually I've done in companies at the past, is that you're exporting your entire bank account reconciliation to Excel, and then from there you're downloading your bank statement and kind of just matching things up as you go. And from what we've just seen with what Cynthia shared and what I shared, you don't even have to leave your bank rec to be able to complete it. You don't need to export anything to Excel. Your journal entries that you need to do, you can do those right within the bank rec. So some really awesome options when it comes to the new way of doing things for the bank recs. In case you need a quick reminder of what we covered in our session today, here is a quick recap of the 5 costliest mistakes not to make at your next month end. Thank you again to our awesome New View Strategies team members for their guest appearances today.